Hello traders, Gary Wagner here. It is 12:52 in Honolulu and 6:52 in New York on Wednesday, August 31st, 2022, and this is the Daily Report for gold and silver. The precious metals as well as U.S. equities continue to trade under pressure to lower pricing consistently throughout the week following Chairman Powell's keynote speech at the Jackson Hole Symposium on Friday of last week. Today, gold gave up another double-digit price decline. Today's decline was $13.60 or 0.78%, with the most active December contract currently fixed at $1,722.70. We did send out a trade alert this morning, and the market did begin to rally, but once we saw that this rally had the potential to be a failed attempt at moving gold higher, we raised the stop to our entry price and were stopped out with a zero sum. No loss, no gains. Silver continues to decline and have a larger percentage decline than gold, with another drawdown of over 2%. September silver futures are currently fixed at $17.86.5. That's a drawdown of about 43 cents or 2.31%. It is also noteworthy to report that when we look at the solid declines in the precious metals markets as well as U.S. equities, they are not based to any great extent on dollar strength or weakness. We have seen the dollar hit resistance just above 109 with consistently fractional price moves on a daily basis throughout this entire week. This first chart is a daily chart of the dollar index, and two things are extremely noteworthy. First is the recognition of dollar strength throughout this entire year. We can define that technically by looking at the three moving averages, the 50-day in green, the 100-day in blue, and the 200-day in red. They are in perfect bullish alignment, meaning the lowest value is the 200, then the 100, then the 50-day. Only on two occasions during this year, which occurred in February as well as just a few weeks ago, have we seen the dollar index briefly move under the 50-day moving average and then back over. And what we can derive from that is that this dollar strength has definitely hurt gold pricing in that gold is paired against dollars. So there is a 100% negative correlation between prices in gold and the value of the dollar. However, we have seen the dollar finally find some resistance after making a series of higher highs and higher lows when it hit a brick wall, so to speak, just above 109. We had this first top that occurred the first week in July, and then over this last week, we have had a series of tops in which we saw the dollar index trade above this price point on an intraday basis, but close below it. And what stands out is the fact is that during this period in which the dollar has been neutral to flat in terms of price changes, we have seen continuous declines in gold pricing, which clearly shows us that this most recent price decline that began after Powell's keynote speech have been based upon selling pressure by market participants and not dollar strength or weakness. Now that gold has effectively traded and broke below the 61.8% Fibonacci retracement at 1734, we need to focus on how it reacts if it continues to trade lower at $1,710, because a breach below this price point clearly shows that there is no technical support until gold would reach $1,680. To gauge the strength of this current downtrend, I've converted our candlestick chart into a Heikin-Ashi chart, and we can see that over the last 3 trading days, you have a series of large Heikin-Ashi candles with no upper wicks. That indicates that there is still strength in this current downtrend. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.